Well, congratulations to NIO and Tesla shareholders who had a fantastic week, and we need to talk about what is actually driving the increase in the share price, and also I want to give you a bigger picture of how to think about investments in NIO and in Tesla. I will give you my learnings of investing early in Tesla and what it means if you are invested in NIO as well. And also I want to give you a more long-term perspective actually, and also kind of my reasoning of what I'm thinking is going on behind and why this moment is actually pretty historic on what has happened this week. And if you're new to this channel and maybe a new investor in NIO, welcome to my channel. I cover NIO quite extensively, and please subscribe and also hit the bell button that you get a notification whenever I post a new video. And if you're back to the channel, awesome, you guys really help us keep on growing. Please smash the like button as always, and please consider to become a patron in order to support us creating this kind of a content. So this week we had the deliveries from Tesla and NIO incoming, and both of them surprising on the positive side and well, at the high end of the estimations or even crushing estimations. I'm not going into specific of that. For me, I wasn't actually that much surprised by the numbers, and on March 26th, I actually wrote a LinkedIn post which was titled "Winners of the Crisis and What It Takes," in which I basically lined out how I see that Tesla and NIO are, during this lockdown period and crisis, coming out stronger because they are actually digital and agile companies in the first place. And I was actually outlining in this article that I see that this would be reflected in the growth and sales numbers of both companies. Quoting the article here, I wouldn't be surprised to see Tesla gain market share in the US and Europe during our period of lockdown. I was actually also doing videos about how I used to plunge in the share prices of NIO and Tesla to load up on some shares. And in the end, it turned out that even though I had to go through this period of struggle and lower share prices, that it was a good investment in the end. And as the share prices are spiking up and possibly people are getting really euphoric now and very emotional about investing and maybe having fear of missing out on this opportunity, I want to use this occasion actually to kind of taking a step back here, having a cool-headed view on things and kind of an objective view of what I think is really going on under the tip of the iceberg here, and what you should be watching as an investor despite this short-term thinking and trading stocks on a daily basis. And in order to make my point, I made this graph to visually show you what I think is going on and why this week has been so historic. So I would like you to think about those companies of going through different stages. So in the first stage, it's all about excitement. The companies going IPO, promoting their product, possibly lots of marketing buzzwords, and actually not a lot of fundamentals have happened here about this company. So these are, for instance, companies like today, Nikola Motors, which have not even a product to show, and they still have the longest way in front of them. The second stage is actually a very long period of uncertainty, and in the next stage of really pain. And this is what NIO actually already went through. So during this period of uncertainty, we kind of getting back from the initial excitement, and we see that it's actually not that easy to grow the company as suspected before. So many investors possibly get disappointed at this stage, and then when we enter the stage of pain, it becomes really crucial. Usually at this point of time, companies are facing bankruptcy or insolvency and are not knowing if they can actually raise the next round of funding. So we have a big gap here between the uncertainty and an initial business validation in which the key assumptions of a startup are getting validated by the market. So kind of achieving the product market fit here. And in between that, you need to kind of jump the gap and the chasm between bankruptcy and insolvency, which NIO actually did with closing the Hefei and Anhui funding deal. And it's only after the business validation and initial product market fit that companies can actually enter the growth stage with the final goal for investors that at some point in time this company will start printing cash and money. So during this week, two important things have happened. For once, NIO has left the death valley of pain and actually made it towards the next section in which they can now validate the business model, and hopefully they won enough time with the funding now that they have a realistic chance of actually getting into the next section, which is the growth mode of the business. On the other hand, it's time to say bye-bye to BYTON, another EV startup founded by ex-BMW engineers with roots in China as well as Munich, Germany, and unfortunately they did not make it through that. Last year I had the chance to interview the Vice President of Design for BYTON in Shanghai. Miriam and I have been part of the opening ceremony of the design studio of BYTON in Shanghai, and we had a chance to look at their product many times, both in Berlin as well as in China. So yeah, it really hurts a bit to see that possibly their story comes to an abrupt end here. I actually saw those signs already last year, as I have been invited by BYTON to do a factory visit in Nanjing with their plant, but it was cancelled last minute, and also a couple of other events that I was invited with BYTON have been cancelled. And now with the rumors and the internal mails that have been leaked, we know that BYTON is closing down on their overseas subsidies and reducing the China team to a minimum, still trying to achieve a next funding round. Possibly Geely will bail them out, but it's not really looking good. And for me, it's sad to see that they actually didn't have the chance to get the product out into the markets and make it available to customers, and thereby getting a product market fit. And possibly BYTON just didn't have it, what it takes as a startup to go through this pain and actually through this valley of death. And very much in contrast to NIO, who did an excellent job in the end. It wasn't easy. This shows you how hard it is actually as a startup to really go through this pain and becoming successful and having actually a chance of executing on their idea and a vision and a future. So this week is really historic because we can see that NIO and Tesla are evolving here as the leading and winning players that have now the bigger chance to actually take what others are not be able to get a grasp on. And what I think is the interesting part here, particularly in NIO's case, is the fact that they managed to progress from one stage to the other one. First of all, why I think the share price is going up is not the delivery numbers and also not the growth numbers. Instead, I do think it's the combination of, first of all, having the funding coming in and it's secured and it's a done deal. And the second point is actually the comment of the CFO of NIO, Stephen Fung, who was saying, "We are pleased to deliver solid results driven by our competitive products, superior services and expanding sales network. Our deliveries in the second quarter of 2020 exceeded the high end of our earlier projections, and we are confident that our goals on gross margin and operational efficiency will be achieved." So I really do think the reason why the shares are surging are a hint on improving margins and a clearer path to profitability. Because from my learnings of investing in Tesla, when they have been in this period of pain, and that was when Model 3 was released, there was uncertainty about the demand. Actually, Tesla was also still facing lots of fear about bankruptcy and so on. And then they did a cash raise, and Model 3 was starting to sell really great. It was not that Wall Street jumped in during this moment. It was only that when they started to actually have a profitable quarter. So what is now going on as a tip of the iceberg is kind of, people starting paying attention to a sustained delivery and demand side here, which is the case. And second of all, that also there is a hint towards increasing margins, which is of course very important for NIO as well as everybody is expecting the new models like the EC6 coming on later this year. So these are the drivers currently that we all know about already. But what I think is really more important that has happened and is actually kind of in the background, and investors are not really noticing the full power of it yet and the full potential, is that NIO has built an enormous community of car owners with actually a very high referral rate. So about 50% of sales of NIO cars are actually referred to from other NIO users. So this strong community about NIO owners is something that other brands don't have, and NIO is combining them with the NIO houses, NIO Live and in the NIO app, and it's quite a unique asset. in which they had to invest a lot of money and efforts, and now they should be able to cash in on this asset. In addition to that, and now particularly with the increasing share price, we are getting a stronger and stronger NIO investor community, something that we also see from Tesla. And now, so the more successful NIO becomes as a company, the more successful we as investors in NIO become. And this creates powerful network effects that will help NIO to go global, to become a well and trusted brand, as well as to get further investment in the future and further reduce the risk of investing for both NIO as a company of continuing, as well as for us as investors of staying invested in the company. In addition to that, NIO has successfully invested in technology, in their EV platform, into technology like over-the-air software updates, into the NIO Pilot, and into extending their sales network, which has cost NIO a lot of money, of course, and they almost went bankrupt for doing that. And now as the funding has come in, this is alleviating the pain of financial insecurity, and this liability of investing in those certain aspects is now becoming kind of an asset on which the company will thrive, and also has an advantage because they did this investment earlier than some of their competitors. And also the biggest benefit now that NIO has gone through this financial crisis is that NIO is becoming really lean as hell. So they have, cut costs wherever they could. They're trying to get as effective and efficient as they can. So think of NIO now as an athlete that has been going through extensive training and hardship, and now is really lean and in the best shape that it has ever been, and now can go out into a competition and compete against his competitors. This is something which we also have seen with Tesla, even after Tesla finally raised some capital and avoiding bankruptcy. Instead, Tesla remained extremely cautious about where they would spend the money that they raised, and this possibly led now to 4 consecutive quarters of profitability and S&P 500 inclusion. So very powerful results here. So NIO is now in a similar situation as Tesla has been after starting to ship Model 3. And all those factors are now coming together somehow, and with all the potential of NIO and its joint venture partners and also NIO Capital, those kind of investments that have been done, NIO has now a big chance to reach actually the growth area in which Tesla is already in, and tapping into the potential of NIO Life, NIO Battery as a Service, the GAC Hycan venture, more than 100,000 yearly deliveries, and also the potential of autonomous driving, NIO Pilot, and possibly going global. And we all know that these kind of opportunity would send the share price of NIO much, much further. But for now, we still need to pay attention about the business validation phase. If NIO can actually really confirm those positive margins, the sustained demand, and actually bring out those new models into the market successfully. And coming back to the Tesla analogy, this has also been a historic moment for Tesla right now, because we saw that during this crisis, Tesla also performed well. And at the same time, we see now the outcomes of Model Y margins and volume, Model 3 China made with better margins as well. We will see in the future that Giga Berlin and Tesla Energy and Cybertruck and Tesla Semi and Gigafactory capacity ramps will add to the growth of Tesla during this growth stage. And of course, there is much, much more potential in Tesla itself, because it's the same thing for Tesla as with NIO, that most investors are not paying attention to what is actually happening under the radar here, because for Tesla it's about ramping new gigafactories worldwide, Tesla Autopilot software and data collection. This is all of the lead that Tesla has also been collecting during going through these periods of uncertainty and pain. And Tesla Energy is also still in the very first steps of unleashing its potential, as well as now we see the effects of 65% less costs in China than previously to manufacture in the US. And in the same way as NIO, Tesla got much leaner in this period of crisis, and this is why they now both become more powerful and are kind of the winner of this historic moment in EV history here. So I hope with my analogy of my my experience of investing in Tesla earlier, and also to give you this bigger picture about where those companies are during those stages will help especially new investors of NIO to make an understanding of where they are currently situated here, and also possibly those investors who got in early during the time of pain and so on, to have a better understanding where the company could potentially go as well as understanding what still could go wrong and what are the really big important steps and important points to pay attention to. Because despite it's looking great for both companies now, for instance for NIO, what could still be going wrong here is, for instance, that the margins during the earnings call are kind of disappointing. Also in the future, we also need to be aware that the growth rates will be going actually down for NIO, because actually why are the year-on-year growth rates so high is because NIO was going through this tremendous amount of pain when the trade war was on, when the EV subsidies been cut for NIO, and NIO had actually a battery recall last year. So yes, if you grow from a slower basis, of course the growth rates will be high. So this doesn't mean yet that we have a continuously high growing company here. Also, there are some shadows possibly on a globalization about NIO. I don't think it's super wise for NIO to jump onto globalization efforts too quickly. They first still need to make this business validation in China, and I think we should be patient about that, because going to Europe, going to the US, of course be great news and big news for the share price. However, as a company, I don't see them quite there yet. Generally speaking though, the momentum and the traction and the sentiment for those two companies is really there now, and also with Q3 and Q4 we will just see better numbers in terms of deliveries and so on. So it's possibly all looking very bright and good. However, as I mentioned before, if you're now getting into NIO just now with this kind of share price, you may see some setbacks during this period of business validation, and that's something where you should be aware of. So in summary, it's really looking good for Tesla and NIO with the next stages. And of course, also if you look at the competition, lots of players are still in the excitement area or have already been sorted out by the market here. I get many questions about, for instance, if I want to invest in Nikola or in other hydrogen-based companies that are in the EV sector right now. And well, personally, I'm not invested in those kind of stocks at all. First of all, I do think that there are overhyped right now in the stage in which they currently are, because they still haven't even entered the risky phase yet. And second of all, I just think that the battery technology is superior to hydrogen. Look at the costs, look at the tech behind it. For me, it just doesn't make much sense to invest in hydrogen at all. I just don't think that the physics and the fundamentals are there, and thereby I would be really cautious to invest in those kind of startups. Well, you need to decide on your own. As always, this is not investment advice. I just tell you how I'm personally thinking about it and where I make my investments. And personally, I'm feeling much more confident on Tesla and NIO, which having this very clear growth trajectory, and now also a brighter future than ever in the current stage in which they are in this process. So let me know in the comments down below what you think about Tesla and NIO, and also what you are doing with your investment. I'm really curious to see if you're thinking about taking profits now, or if you stay invested in the companies. I personally stay invested. I don't make any changes right now, and I've been quite happy to being able to pick up more shares in both NIO and Tesla during that crisis. As always, please smash the thumbs up, and also once again, thank you guys supporting our channel on Patreon. This week I also sent out a letter to our patrons about one particular China stock on which I got some information, which is I think quite important to take a look at. So if you want to become a patron, you also get access to this first-hand information before I'm actually able to make a video about it. And we also really appreciate it if you are supporting creating this kind of a content. Actually, there is lots of exciting content about NIO coming up. I have many videos in the plans, and also some quite big stuff actually coming up, so stay tuned for that. Please subscribe to the channel, and thank you guys for watching. Have a great weekend and see you next time. Bye bye.